Let me just explain what that is. You know, we said before that there were 4 taxes here. There's the income tax, Social Security, Medicare, and FUTA. Well, talking about the income tax for a moment, we said that normally when you figure out an employee's tax, you figure out whether they're married or single, how they are then being paid, how many dependents they have, and then you look it up in a tax table, which is in this book, and you find out how much is owed. But there's another way of calculating that tax, and that method is called the percentage method. And the way you calculate that tax is you start with what they earn in that pay period. You then look at the table that's on page 32 to calculate the value of their withholding. You then subtract the value of their withholding from what they've earned. And then you look at another table, the table on page 34 and 35, and you follow the instructions of that table to calculate what their taxes are. This is available in case that a person earns money that is not covered in the tax tables and is an acceptable alternative to the tax tables. The answers that you would get comparing one way to another would be a slight variation, but there would be a variation. The actual tax tables I've been alluding to start on page 36. And aside from just being able to read a graph properly and use a straight edge to find numbers, let me just call your attention to the very first entries in the upper left-hand corner of the page. You'll see that it's talking about someone making at least $0 in the week to 55 or up until 55. And then the next bracket goes 55 to 60. So what if a person actually made $55? Would you take the lower bracket or the higher bracket? And the answer is the higher bracket. You're going to pay more rather than less taxes. Okay, these tables go on for quite a few pages, and you may already be familiar with these. If you look then on page 56, you find a table that's used to calculate the EIC payments, the Earned Income Credit payments. And there are several other exhibits here which then end on page 62, which is a short index to the Circular E. And then on page 63, you have an exhibit that's an order blank for forms that you may need. Now on your outline, you'll notice that many of the things that I discussed just now are listed, and the specific reference page numbers are listed as well. So you're going to want to go back through your outline and make sure that you've marked all of the items that are indicated in the various sections. And that completes the topic of organizing your business, the third section, Employee Payroll Regulations, the Circular E. Section 4 deals with Chapter 489, which is the licensing law. If you take a look at your outline, you'll notice that this is covered in Chapter 2 of the Contractor's Manual. So if you open up your Contractor's Manual to the first table of contents that's in Chapter 2, in my book it's 2-3. And what you first need to recognize here about this chapter is that you have really 3 sections to the chapter, even though they're not really identified as such, and therefore you're going to have 3 separate tables of contents. This first table of contents that you're looking at is commentary. The author has written commentary about the statute. Now, if you look all the way down at this page at the bottom, you'll notice that it says Chapter 489, Appendix A, and Construction Industry Licensing Board Rules, Appendix B. And so you need to know that in Appendix A, you have a table of contents for the statute itself. And also in Appendix B, you have a table of contents for what are called the board rules. Now, I may have mentioned this before, but just so that we start off on the right page here, what happens is a statute comes from the legislature, and there are a number of features about laws. One is that a law is something supposedly that moves like a river. All the laws are supposed to move in the same direction. You can't be a fish jumping back against this stream. And so laws are supposed to be consistent all the way down the line. The second general feature about the law is that it tends to be restrictive. It continues to restrict as it moves more particular. And so let's say you had a law at the state level that said you needed a license only if you were going to do work of a value of $1,000 or more. And then you had a specific municipality in the state that said, no, you're going to need a license unless you do work, the value of which is $250 or more. Generally speaking, although there is something of a conflict there, the more restrictive provision would follow. Now, what couldn't happen would be a municipality municipality turning around and saying, we don't care what the state says, you do not need a license, or you need a license, or you don't need a license under any circumstances. Now that municipality is like that fish trying to swim against the tide. So the law tends to move in one direction, and the more restrictive the law, the more followed that law will tend to be. That is to say, if there is a conflict, the more restrictive provision will tend to prevail. The other feature in general about the law that you should be aware of is as you read through these various laws, particularly in the section dealing with employee law, is that really a law has three parts, and if when you look at these laws you specifically look for one or two or the third of these parts, it'll make it easier for you to find things in these laws. The three parts of any law are, number one, who does this apply to? In the case of 489, who is excluded, who is included? Are there exceptions? The second part of the law is, well, what's it all about? And if we really had to summarize 489, we would find that it's all about the purpose of it, which is to protect the public. And then finally, what happens if I don't do it? And that's where you get into different penalty ranges and that sort of thing. Now, the legislature is going to create a law, and then the legislature is really never going to want to deal with that law anymore. They're going to create inside that law a self-perpetuating mechanism. And in this case, it's a board. And we have such a self-perpetuating mechanism. We have the Construction Industry Licensing Board. This board consists of 18 people. They're appointed by the governor for 4-year terms, and they represent one license holder in each category. So that therefore every category of licensure is represented, plus some building officials, plus some consumers, and they mix all these together. And this is the board, and this is who you are applying for licensure to. Now, one thing that I want to mention also as we move forward here, before we actually get into the statute, you remember in the last section we talked about independent contractors versus employees. And in your contractor's manual, on page 2-9, this topic is stated and gone into in pretty good detail. And essentially on 2-9, what they're describing is, remember I talked about this line in the sand where you step over the line, you are controlling the process by which a person gets something done, as opposed to simply accepting the product that they are producing. And they are particularizing the tests here by showing you what they would ask if they were looking at such a person, as they would look at to see how to classify them. Now, the problem with this is that these are called common law rules, which means that they're subject to interpretation. It isn't that you need to miss the majority of these or hit the majority of these. It's going to be a subjective determination by the person looking at the situation as to whether on balance you are controlling their process. You can look over these items as you will, and again, you'll want to set yourself up appropriately as you go forward in your business. For the exam, however, realize that you may be called upon to know some of these items or get back to these and list them. And also on page 211, on the 1, 2, 3, 4th paragraph up from the bottom, there is an explanation of the specific penalty that you might have to pay if you misclassified someone, particularly if you also did not send a 1099 at the end of the year. So you'll want to be familiar with that specific paragraph as well. Okay, turn back to the table of contents where we started. And along with your outline, you have a couple of exhibits included in this outline. And for the moment, what I'd like you to do is turn to this first exhibit, which is Exhibit 2A, that has a little stick figure on it. If any of you have a Macintosh computer, you'll understand the significance of the stick figure. But take a look at this for a minute, because I also think this will help you in dealing with interpretation of the law. Reading the first paragraph of this exhibit, you'll notice that the basic idea in a sentence consists of three things. It consists of a subject, which is the thing that's doing it, the verb, the thing that's being, the motion, and then the object, the thing that's being done to. So for example, the stick figure, Bob is walking to the store. Bob is the subject, is walking is the verb, and to the store is the object. Now, a subject, a verb, and an object constitute a complete thought. But I don't have to write a complete thought that clearly. In fact, if I wanted to make a lot of exceptions, or I wanted to color the information a certain way, or I wanted to make any kind of contingency on the information, I could do so almost an endless amount. And all I'd have to do would be to construct the sentence appropriately, which means put commas in the right places. And so if you look at the next paragraph, you could see how it might turn out. You would have a whole big paragraph full of all kinds of conditions, and all you're really interested is Bob is walking to the store. And when you read through laws and some of these exhibits, you're going to not want to read the way you have been trained to read. You know, we've been trained to read in a linear fashion. You read the first line first, and the first word in the first line, and then the next word, and the next word, and the next word. And if you've ever taken speed reading classes, some of them approach this by just having you speed this process up. But others approach this by having you identify key words, so you don't look at words that are not relevant to the main idea, and you zero in on the idea. And that's the theory that's being described here. You need to scan this information first, not read it. Scan means you're looking over quickly. You're not internalizing every word. You're just looking for key words. So when you approach a section of a statute or you approach a section of the AIA documents, don't read it first, scan it first. And what are you looking for? You're looking for the subject, the verb, and the object. You want to get the main idea and not get sidetracked by all the different potentials. And then once you have the main idea, at that point you shift gears and now you read more carefully what the story is about. And I think that will help you in this entire process. So go back now to the table of contents in your contractor's manual, and also the outline in your module, where we talk about 489. And we've already described the difference between statutes and board rules. And we already took care of number 2, how to read, quote, legalese. And the next topic that's described is 3 exemptions to licensing. Now you'll notice that each particular topic has the specific reference number in the statute or in the contractor's manual that addresses that topic. So I'm going to describe each of these things, but your task then is to go back through the outline and mark your books appropriately so you know how to get back at this information. Not everybody has to have a contractor's license in order to contract. There are a number of exemptions. For example, one exemption is if you do work that is in value less than $1,000 at the state level, keeping in mind that municipalities can further restrict this. Another example would be a court ordering someone to do construction. Another example would be Florida Power or Florida Power and Light or any of the other utilities. They do not need licensed electricians to work on their own equipment. These are set up in the law. But if you are contracting and holding yourself out to the public to perform contracting as a service, that's when you must be licensed. You'll also notice that there are some exemptions for homeowners or owners of property. Homeowners are allowed to build their own home, and that usually works out to be 1 a year. And the commercial area, there's a lot of confusion on, but it works like this. An owner of a building, a commercial building, can renovate that building up to a certain dollar level on their own without a contractor, as long as they themselves are occupying that building. They cannot do that and then lease the building out, because then in a sense they're holding themselves out to the public. And that's the line in the sand there. The next topic in your outline deals with what work must be subcontracted. And essentially a general contractor can do work anything except for electrical, plumbing, mechanical, the big 4 contractors, and roofing, but you are allowed to do certain roofs. If you're building the house from scratch, you're allowed to do a shingle roof, for example. You're not allowed to do a hot mop style roof. So these are listing those things that must be subcontracted and those things that the contractor can do themselves. Topic 5 also deals with independent contractors, what we just covered in the contractor's manual. Topic 6 deals with unlicensed activity. Now, unlicensed activity abounds. We're all aware of this. There's really 2 economies that exist in the contracting area, but as things become more sophisticated, it's becoming harder and harder for unlicensed activity to go forward. The point that they're making in this section of the contractor's manual is, however, that if you are involved with unlicensed activity, you cannot then turn to the courts to remedy problems between participants in the situation. The next item deals with primary and secondary qualifiers, and in many ways is the core of what you need to know to successfully navigate as you go forward in your professional career. And if you would, take out the second exhibit or second appendix in your module, and it is an appendix that looks something like this. And if you look at it, we'll go through it. Now, this exhibit is trying to show you in a snapshot what all these different relationships have in common and how they work with one another. And your task is first to comprehend how this works, so just sit back and relax and listen. But then next, you're going to have to go back through your outline and with this exhibit and mark the sections of your statute that reflect these points. If you'll look at the first box at the top, we're talking about a business entity. And any business entity, except for a sole proprietor, has to have a primary qualifying agent. Item number 2 under business entities says you have to have formal written approved relationships. Number 3 is that you are providing contractor services to the public. And number 4 is one you would not be familiar with. In addition to your licensing number, there's something called a QB, or Qualified Business Organization number. And every business organization that's involved in contracting, except for the sole proprietor, has to have an identification number called a QB number. After you pass your exam, the state will invite you to complete your application to obtain your license. And in that process, they will give you the form to apply for your QB license number. In addition to that number, after you are set up as a company, you will need a federal tax identification number, and again, the sole proprietor is the exception. Now, if you look at the box entitled Primary Qualifying Agent, that's who you will be if you work with or set up your own corporation after you get licensed. You will be the license holder and therefore the primary qualifying agent of whatever entity that's going to be doing the contracting. Now, the primary qualifying agent is an individual in reality. But in concept, it doesn't have to be just one individual. For example, if you were a family and everybody in your family had the contractor's license, and you simply kept sending in new applications for licensure with the family business as being the company that you were going to get your license under, and you didn't give the state any additional information, then each individual listed that way would themselves be the primary qualifying agent. They would be jointly and severally responsible, just like any one individual would be as a primary qualifying agent. Now, you'll notice here that there's a little line going to a house on the right, and a little line going to a dollar sign on the left. And what I'm trying to show here is that the primary qualifying agent is responsible for everything that happens in the field on the right and everything that happens at the bank on the left. In fact, the statute itself says that the primary qualifying agent, when they sign on as such, is saying that they have final approval authority on all checks, drafts, or other financial instruments issued by the company. In other words, they can't say they didn't know if the money winds up in the Bahamas. Now, this primary qualifying agent is always on the hook for anything that happens in the field. There's no way to divorce yourself from that. However, there are many situations where this model doesn't quite work. A big company, for example, it's likely like Arvida, and not to pick on them in particular, but any big company, the primary qualifying agent probably never sees the checkbook because that company might have a comptroller. In such an arrangement, it doesn't make any sense to say that the primary is responsible for the money because the primary has no activities connected with the money. So an alternate arrangement can be made where an individual who does not have a contractor's license, but who is willing to be financially responsible for the company, petitions the board to be elected as a financially responsible officer. Such a financially responsible officer is taking personal financial responsibility for the company. And they are posting a $50,000 fidelity bond, a bond that says, hey, we trust you, but when you leave, here's the money to cover it. You'll notice at the points next to the financially responsible officer, no license is required. It's an optional appointment. The individual accepts full responsibility, must post fidelity bond, and if a formal appointment is accepted by the board, the primary is off the hook for finance. Now, let me make a reality check here and just explain a hair-splitting point that is important. You know, earlier when we talked about organizing a business, we talked about the benefits of a corporation in creating a separation between yourself and the business. And there is an idea that as a corporation, you are shielded from consequences. And to some degree, that's true. But let me outline two situations and how they're dealt with in a different way. Situation number one, I go down and I establish in my company name, I do not sign personally, but in my company name, I establish credit at a local vendor. And because in the course of business, I don't operate successfully, I wind up in a position where I go out of business and I cannot pay that vendor. Since this was an activity done in good faith in the normal conduct of business, and since I did not